Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock and why it has over 54% upside according to 4 and 5-star analysts. So in this video, we're going to look at the latest PLTR stock price targets, which says on average that the PLTR stock could surge by around 54%. Then we're going to go over the latest PLTR stock news, especially what could happen after Palantir's earnings report, which is going to happen on February 17th. And then we're going to briefly compare Palantir Technologies to Digital World Acquisition Corporation, ticker symbol DWAC. And we are going to compare these companies because the author of this particular article said if you need to choose between one of these companies to invest in, which company could be better off for you over the long term. So remember to go and smash that like button right now for more videos like this one. Subscribe if you are new. Comment your thoughts down below about Palantir's earnings report and DWAC stock. And without further ado, let's jump right into today's stories. So a Deutsche Bank analyst named Brad Zelnick expects the results for Palantir's earnings report to come in according to what analysts project for the overall company. That would mean that Palantir is supposed to bring in around $418 million worth of revenue. However, I personally think Palantir could bring in closer to $420 to $425 million worth of revenue. If you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial customers as well as government agencies. And multiple 5-star analysts believe in this company, particularly in their sustainability and their quality of growth for the overall future, and I 100% agree with that. This particular 5-star analyst, who is Zelnick, notes the slowdown in Palantir's government and commercial revenues overall. However, their revenue growth rate is still above 30%, which is what management projected for the next 5 years for Palantir Technologies, so this should be good news. Although some analysts say this is a worrying sign for long-term investors that will affect the profitability of Palantir Technologies, this still could be an overall good buying opportunity right now. In the upcoming earnings report, Zelnick, who is the analyst that we're discussing right now, is looking for a significant quarter-over-quarter increase for their government revenues. He wants to see more government revenues coming in and more government customers. However, he believes if they do increase their government revenue, that it's only going to be a moderate increase. However, this still could be a good long-term buying opportunity for the overall stock. He also notes that Palantir Technologies actually obtains the majority of their revenues from various government contracts, but he does note and actually agrees with me that their commercial segment of their business is actually going to be their ultimate success and eventually pass the amount of revenues that their government segment makes. And this will help Palantir Technologies scale into a very profitable company longer in the future. Zelnick also rates the PLTR stock as a hold right now, and he has an $18 price target, which means that the stock price could see some great stock price appreciation, because currently the PLTR stock price trades for around $14 per share as of this recording right now, and we could see some major volatility for this particular price after the earnings report, whether it's going to go down or if it's going to go up, and I've done multiple videos on what I think will happen to the PLTR stock price. But the reason why this is a good long-term buying opportunity according to this analyst, even though he rates Palantir stock as a hold, is because the stock's price has recently pulled back around 60%, which would give investors right now around 25% upside from the stock's current levels. However, what do other Wall Street analysts think of Palantir Technologies? Well, Palantir Technologies has an overall holding consensus among professionals and Wall Street analysts, with one analyst being very bullish on this company and says to buy the stock, 3 analysts such as Zelnick that says to hold the company, and 2 analysts that say that we should sell the stock right now. However, their average price target and price consensus for the PLTR stock is $21.60, which would give investors around 52 to approximately around 54% upside if you would decide to invest right now. And remember, these are high-end analysts that are giving these price targets. These analysts rank anywhere from 4 to 5 stars, which means that these analysts are extremely trustworthy, that they're professionals in this particular industry, and they have a very good track record. Now, out of the top 3 analysts that are covering the stock according to Wall Street, that come from Jefferies Financial Group, Morgan Stanley, and Deutsche Bank, the Jefferies analyst actually says to buy the stock, the Morgan Stanley analyst says to sell the stock, and the Deutsche Bank analyst says to hold the company. And depending on their price targets, which are $21, $24, and $18 respectively, we could at a minimum receive a 27% increase and a maximum of around 69% increase for the overall stock price. So let's hone in and talk about the PLTR stock price and where it could go from earnings. So currently right now, like we we said earlier, the stock is trading for around $14 per share, which is actually already an increase because it was trading at around $12 per share right before the company actually anticipates very positive revenue results for their upcoming earnings report. And if we look at the low-end price target, the average price consensus, and the high-end price target for this particular stock, they are all above $14. And this doesn't even include Morningstar's fair value rating for the stock, which rates all the way at $31 per share. So we could literally double our money if Morningstar actually is right about this particular company. But regardless, it's always good to see that the current stock price is trading below the low-end stock price target of $18, which means at minimum in the next 12 months, we could see at least a 20% gain from the overall stock. And that's why all of these price targets are actually going upward to a very positive slope with their high-end, low-end, and even average price target. Now, why are so many analysts, specifically Wall Street analysts, saying to hold the stock? Well, the reason for this is that Palantir is supposed to shine its true colors between 2024 and 2025. So if you are not an investor that is willing to wait until 2024 or 2025, this may not be the stock for you right now, and you could look back on this stock and just add it to a watch list and decide to invest into the stock in these particular years. However, you could miss out on great stock price appreciation, or you could even get the stock at a better price depending on what Palantir actually gives certain investors. So overall, from an analyst perspective, these are actually really good price targets that are all above the stock's current stock price. So on average, we could see at least a 54% upside from the stock's current price. Hopefully, Palantir for their earnings report can give us fantastic free cash flows of over $400 million for the entire year of 2021 and better revenues than $418 million, because this would really invigorate investors. However, even if Palantir does decide to give us good news and they have a revenue beat, an earnings beat, and impressive free cash flows, this does not necessarily guarantee that the PLTR stock price will end up surging. However, that is more likely than it falling, but with how volatile the stock market has been and how much mixed publicity that Palantir Technologies has actually received as of late, we're just going to have to wait for the earnings report to come in to see what the stock price does and how investors react to its either good or bad news. Now, overall, I think Palantir will have an earnings beat, at least in earnings per share, revenue, or free cash flows, but to be sure, we're going to have to wait and see for tomorrow. So that brings us to our next article, and that is where this author is comparing against another article whether Palantir Technologies is a better buy than Digital World Acquisition. And if you didn't know, Digital World Acquisition is a special purpose acquisition company, or a shell company, also known as a blank check company, which is trying to take a company that is owned by Donald Trump public on the open stock market. For instance, Larry Raymer is very positive and bullish on DWAC stock, while the author of this article believes that Palantir is actually a better growth stock here. However, on the flip side, Larry believes that Palantir is way overvalued, and he actually puts his money in DWAC stock. So if you had to invest into one of these companies for the long term for 2024, which of these companies could be the best? Well, first I want to say that both of these companies are extremely high risk, but DWAC stock even more so. So here is what Raymer has to say about Palantir Technologies and why he is very bearish and negative on this stock. He says in multiple columns that I've noticed that Palantir prints a great deal of red ink, particularly if its huge amounts of stock-based compensation are factored into the equation. For example, in the third quarter, it lost $385 million if the approximately $283 million of stock that it issued are factored in. He finishes the article by saying that Palantir does trade at a premium of around 15 times its 2022 sales. However, right now it's probably sitting at closer to 13 or 12 times their forward sales for 2022, which is supposed to be around $2 billion. And that's why this particular author of this article is actually bullish on Palantir Technologies, because he says that Palantir in 2022 is estimated to bring in around $1.99 billion worth of revenue, yet the other author still thinks that the stock is overvalued. So how does Palantir compare to DWAC stock and the company that it's going to take public, which is Trump Media and Technology Group, ran by Donald Trump? Well, the reason why this author is flabbergasted that the other author thinks that DWAC stock is a better buy than Palantir Technologies is because right now Trump Media and Technology Group has absolutely no revenues compared to Palantir's almost $2 billion worth of revenue, or projected revenue for 2022. Once more, it's actually very likely that Trump Media and Technology Group will actually lose money when it launches and not be a profitable company right off the back. However, with that being said, what would it take for DWAC stock to match Palantir's sales of around $2 billion? So how long would it take for DWAC stock to compete with Palantir, at least on a revenue basis? Well, let's find out and see what these authors have to say. Well, this is very difficult to estimate because right now analysts have not made any estimates as of yet for Trump's Truth Social platform or their overall company that is going to support their Truth Social platform, which is going to act like the conservative version of Twitter. Luckily for us, this particular author does have a scenario of what Donald Trump's company could be making in the first year. He estimates that in the first year they could generate around $900 million worth of sales and even $180 million worth of profits in its first year. Now, although this is possible, let me put this into perspective. It took Twitter, ticker symbol TWTR, more than 6 years to get to an annual run rate of around $900 million worth of revenue, and they did this while losing more than $600 million, which means that if Trump's company did actually achieve $900 million worth of sales, this does not guarantee profits of around $180 million, because if we compare them to Twitter, and remember, Truth Social is directly comparable to Twitter, we could at least estimate a $600 million loss and not a $180 million worth of profits. So at most, the author of this article says that this scenario is actually wishful thinking. Now, clearly the author of this article is biased, and if you would like to, you could feel free to invest in both of these companies, but remember, these are high risk, high reward plays. I personally am not in DWAC stock for a multitude of reasons, mainly because I don't have any financials to actually estimate a proper price target for right now, and also the company is trading at around $84 per share, which is extremely overvalued in my personal opinion. So what would happen if the DWAC merger with Trump's company actually didn't go through? Well, we could see this stock drop substantially, and this would really rip off overall investors. Even if the merger ends up going through, we could still see this number drop substantially. So again, this is an extremely high risk, high reward play, but if you believe in Donald Trump and his company, you might want to hold it for the long term. However, I personally am no way buying the stock at $84 per share right now. The risk is absolutely disgusting right now because one, the company doesn't have any financials for me to analyze to estimate a proper price target, and lastly, I wouldn't even compare DWAC stock to Palantir Technologies. To me, these are very strange companies and stocks to compare to one another. They're not even in the same market segment or industry overall. So if you want to invest into both companies, feel free to do that. I personally am just long on Palantir, and I would need a lot more data to determine if DWAC stock and Trump's company is a good investment overall. But I would love to hear your thoughts down below. What do you think of DWAC stock and that SPAC merger? Comment down below your price targets for the PLTR stock and how you think they will perform for their earnings report tomorrow, and I will see you in the next YT video.